Traders, what's going on, guys? Time for another breakdown. It's the middle of the month. All right, tomorrow will be the 15th. Okay, so this month is just like the year. This is really weird. It's kind of weird how fast things are moving, but I just remember we were in month 6, crossing over to month 6. That whole prelude as to saying, hey guys, we're about to hit the second half, and yeah, we're already 2 months in. So after this month, we got one more month of Q3, and then we're into Q4, and then it's the end of the year. So that's pretty interesting. So we've had some pretty cool things happen in August. August has been a pretty decent month. I've got a couple of snippets I'm going to show you guys from a webinar that we did yesterday. Actually, we did a webinar on Thursday night as well. I lost the footy for that one, but I'm going to give you guys an idea as to some of the positions and some of the market directions that I had in mind, right? So we've actually seen the euro kind of, tinker off a bit in terms of its momentum to the upside. So that's something I wanted to talk to you guys about. It's interesting to see how, we've seen an escalation in the North Korea situation, but we really haven't seen too much of a push higher on that Euro USD. And that's just because we do have a couple of fundamental things coming in from the Euro dollar that I think could be potentially weighing that Euro down a bit. But do I see a continuation of markets going higher? We'll go into the charts, we'll check it out. I still like the targets. I still like the $1.22 targets on this Euro USD. I think there's a lot of profit potential to trade up into that range, but there's a specific area of structure that I want to show you guys. We have a monthly fib, and I have a weekly fib from the low to the high, a monthly fib from the high to the low that I want to show you guys that give us a nice structure that I think price could range around in a bit. And if we continue to get this US strength, I see us coming back down into, potentially the high 16s, low 17s. I think we're in the mid 17s right now, which is a trade that one of our guys, Jesus, threw out there in a channel that we have. I'll make sure I post that below. It's a Telegram chat that you guys can get some of the live trades in. But other than that, folks, hope everyone's been doing good. Again, I think we're still keeping up with some of the record volatility in terms of markets on this end. Equity side volatility has been really low. Okay, it has. And sorry for I didn't even mention new setup. This is my house. Okay, I didn't go to the office today, so I was like, I'm just gonna set up here and start cranking out because man, I didn't feel like leaving the house today. I'll be there tomorrow. Maybe we'll shoot some stuff up there tomorrow. Other than that, we had an NZD sell last night that worked out pretty well. I still see a little bit of downside on it, but that means we will be coming down into a fairly large structural level. So we'll have to kind of look into the charts and maybe look into the fundamentals and see where we can get on that. I still love pound for a buy. But last night I mentioned that, hey guys, we've been consolidating on this pound for a while. We may need to take another leg down. And currently right now we're sitting at the low. Check out the little snippet that I mentioned last night for pound. And we may see a continuation based off of, that idea. So check out this snippet that I mentioned. For the GBP USD, maybe we need to come and touch the low before we get a move higher. So I'm not looking to play the sell. I'm definitely just kind of waiting on the buy here for this GBP USD. And, just going to be patient with it and kind of see what we get. Cool. So, I actually said the same thing for Aussie. I could give you guys another little snippet on that, but I think you should just believe me. Said the same thing on Aussie. Again, I was kind of worried about us not really maintaining and breaking that. We were maintaining the structure there on Aussie. I'll give you guys a screenshot. But we weren't breaking the high. I felt like if we were to get momentum, it would have already came about. So in my mind, it's like, okay, I think we have a lack of buyers right here in this buy side area, in this area here. We might need to, again, take another leg down. But if we take another leg down on Aussie, that's a pretty enormous structural area. I mean, look at Aussie on the weekly right here. If we take a leg down there, we're clear to the 77.50s, a target that I've been waiting for Aussie to get back to for quite some time. That means we'll come sitting. That means we'll come and sit back on the previous 2-year low, 2-year structural high actually, that Aussie did in 2015, 2016. So that's something that's pretty interesting to look at. Other than that, still got a lot of things I want to push out to you guys. Got a lot of different new campaigns that I want to come up with to kind of push out to you guys as well, to inform you a little bit better. I've been focusing a lot more on investing and the idea of investing. I mean, working at the fund, you get a lot. I mean, that's all they do. I mean, it's an investor relations office. So at the end of the day, it's being ingrained in my mind, and I just see that there truly is there's a wealth consciousness that certain people have, and it's based off of how they were raised. And there's a poverty consciousness. Okay, I mean 80% of millennials, they don't know how to invest. Okay, and 50% of America don't have a bank account of over $10,000. Okay, so obviously there's a disconnect somewhere, because when it comes to the accumulation of wealth, it almost seems as if it's literally just information. Information is the difference between, and obviously execution. A lot of people are fucking lazy. But it seems as if information for those who are a little bit more active and work hard. There's a decent amount of people that work hard in this society. I felt as if they were a little bit better informed, they would be able to make decisions, especially people like yourself that are literally, in a capital market, in a marketplace where there's money moving around, where people are holding assets for years and holding assets for days. At the end of the day, it's investing. You're trying to catch the arbitrage and the differential between value and price, something we always talk about on our Top Trader Call, okay? If there is no differential between value and price, there is no profit potential, right? So that's why we create a methodology, okay, a system, a strategy that surrounds the business in terms of, hey, look, on a daily basis, I want a daily routine where I can find instances, okay, in this marketplace, in this ecosystem of buyers and sellers. I want to find a situation where, or put myself in a situation where repeatedly I can have an edge where here's value, here's price, and I can catch the differential in between. All right. So that is something that we are all searching for. Okay. As a trader, you were looking for that, and you're looking for that on a monthly basis. Okay. Where you can basically say, hey, look, all right, 7 out of 10 times, 6 out of 10 times I place a position. All right. I'm putting myself in a scenario. I'm putting capital at risk in a scenario where, hey, look, I'm doing pretty well in terms of finding that edge. Picking that profit potential in between price and value. A scenario that I like to use a lot is, let's say shirts are going for $20 and you got one for $5. What's the profit potential? Price is $5. You copped it for $5. Okay. And value is $20. So what's the profit potential? The differential right in there, $15. Okay. That right there is technically a little investment. If you created a business around that, you would have to invest in shirts and you have to sell them for, at a higher price. I mean, that's what people are doing on Amazon every day, right? You're doing the same thing here. You need to construct and develop a methodology around that rationale. And what's interesting is, notice that would require you to know why you are in every trade, right? That would mean you would really need some information and some quantifiable, statistics or requirements that tell you, hey, this is the scenario I need to be in. Okay, so I got a lot to say about that subject matter. I talk about it a lot. I'm making a rookie investment course. So head over to motiveFX.com when I'm finished up with it. Hopefully I can finish up with it this week. I'll push it out there when it's all done. And I kind of want to go deeper into the rationale and the idea of investing. Okay, I mean, I took up investment management at university, right? So this is why it's kind of like spewing out of me. But I think there's a disconnect and I want you guys to know about it, and it can help your trading. It can help your trading because it is the foundation. Trading is the foundation of that, okay, of investing, okay? So, guys, let's do this. Let's check out the Euro, Aussie, GBP. I want to check out the US CAD. We had a buy-side idea in the US CAD as well. Let me throw that out real quick. Let me show you guys the buy-side idea I had for US CAD. Check that out. Then right now would be a great time to start looking at some buy-side ideas up here at the 2690s. So if we get a break at the 2690s, then I would love to take it back up into the high, and we might be able to have a continuation. And that's all on the idea that we get. Okay, so as you guys saw, markets pushed higher. I was a little bit worried about, a break of that low, but I kind of felt as if, hey, look, recency bias to market structure. I felt as if it'd be a lot easier for price to push higher up into structure there. Anyway, so guys, look, let's go over the pairs for, what's coming up. That was hindsight. That's already happening. Those are positions I'm actually already in. And we can actually continue along with, a directional bias. And maybe we can get a continuation of these markets. Euro's actually at a level. I'll show you guys where things might reverse. Let's take a look at it. And again, if you guys have any questions, let me know. Like and subscribe. Okay, please, thank you. And let's go into the charts. Let's see what we got. All right, traders, let's pull over into these charts. We'll start off with this Euro USD. So I already got a couple of things drawn up here, so bear with me. I'll delete it and kind of pull it back, but everything's pretty much here. So let me pull back a little bit more. I want to go to the monthly because I was talking about this monthly time frame with a couple of the guys, and originally we rationalized that the $1.22 would be the next best target for us, and that's just because, again, that kind of leads us right at that 50% retracement. But if you guys notice here, I mean, right in between this 38.2 and this 50, we have some pretty extensive structural areas that could have markets turn around. I mean, we don't have to pinpoint accurately hit off on that 50 then turn around. I mean, markets can come up, range inside of this mid here, and then turn over a bit. I mean, there's some pretty situated structural areas, in 06, 1999. Then we have some wicks down into 2010, 2012. And that's really all we get there. And we do have a split here in terms of price, closing and then starting up again. And sometimes you can get some deviations of price around that as well. And at the moment, okay, if I pull over and let's pull back into the weekly, at the moment, what we have right now is, I mean, we have structure kind of, we have markets really kind of hitting off right on the other underside of that structural area. Okay, so that was a structural area, again, to say it again, that was a structural area that I wanted you guys to check out. And if I pull off this structure here, let me just take kind of, not everything away. I don't want to take everything away. I'll just pull off this fib, because there's a pretty important fib that I want to show you guys. If we talk about coming in from the low to the high, that was the area that I thought markets could kind of range around in, and it exists a little bit within there. So a little bit at that high, and honestly, if we pull back, I want to show you guys pull back all the way over, all the way over. Honestly, right around not quite at the 23.6, but I could see if we have any kind of U.S. strength. All right, if we have any kind of U.S. strength, not saying that we can't come higher, but I think the mid 19s is really where we could see this thing max out at. Yeah, we could push into the the low 20s, but outside at the end of the day, it's a low zone. But I think we could have markets meander around this range here. Okay, so from the 1607s, I mean from this 1607 all the way up into the 20, it's a 400 pip range. We haven't yet created a fairly large range in a while, but we're having a couple of things play in the favor of the U.S. dollar. So literally not even 50 minutes ago, North Korea just announced that they're not going to be launching nuclear missiles at Guam, right? So some pretty heavy sanctions that got cracked down with that whole situation. No exporting of coal into China. No exporting of iron ore into China. China basically cracked down on a couple of sanctions that would have really stipulated North Korea there. And so that has actually eased things a bit. If you want me to prove it to you, coincidentally, we were at a high at gold. Well, look at what happened once we had that news come out. We've had a pretty strong sell day on gold, okay? Because, again, people were kind of running the safety off of the North Korea tensions. Look what happens as soon as we get some a relief there, okay? We're actually pulling back. I mean, if I pull back a bit, you guys can notice how, again, we had a structural area right there anticipating, something. But the fact that we just randomly aligned at the high, and then not only did we randomly align at the high, markets favored pushing capital back over into some more riskier assets. Remember, if you're pushing into gold, you're a little bit more risk off, that they would coin it as, right? So this is more of a safe haven. Well, guess what's going to happen if you find out that you're not on the brink of nuclear war? You're probably going to start trading again. You're not going to be holding your money over here in gold. So if we pull back over to the Euro USD, that could be, that could potentially favor the US dollar. It really could. Now, the situation that I'm in right now for this Euro USD is I have a pretty nice structural zone that I want to show you guys that's actually a channel. All right, so let me pull this up for you. But I saw a pretty decent channel, and we are actually sitting right at the channel. Okay, so if we pull this up there, boom, and maybe a couple of you guys maybe already have this drawn up. Let's see what we are. So we're probably right around here. It looks better on the 4 hour. I should have been a little bit more accurate. Could have got on the 4, but that's good right there. You guys will notice that we are aligning with the channel right here at this price point. If I pull back, let me remove some of the stuff here, and I'll pull over, and I want to show you guys another little structural area that's fairly important. It's fairly important. I'll show you guys on the daily. And again, I'm not saying that we can't get U.S. weakness. We could definitely get U.S. weakness. We have a Fed meeting on Wednesday. Obviously, we got crude oil on Wednesday as well. But again, we have an FOMC meeting on Wednesday that could give us something. And we got retail sales tomorrow. By the way, in 15 minutes, we have an RBA announcement. Okay, we got an RBA announcement. So that's going to be interesting, and we'll definitely get some volatility there. And so that's something that I definitely want to talk to you guys about. But until then, you guys can already see kind of what I got drawn up here in terms of a profit target, and where I'm looking to kind of have my stops be placed. As volatility, as I kind of see the volatility, these things might widen. I might throw my stops, potentially saying, all right, screw it, I'll just go for a 1-to-1. Throw my stops underneath the low of structure, or at least near the low of structure here, and only expect markets to come back up into the high, which will give me around a 1-to-1 risk reward ratio. But I'm liking the channel that we have drawn up right here. And one more thing, just to give you guys a little bit more of a maybe we will get an upside move, is when I drop from the low to the channel to the high. You guys will notice that we've kind of already pinged off on a 23.6. Okay, so we came down, markets rested around that 23.6, and we didn't get any kind of true closes down here, which I don't like. I like to see markets close at the level or near the level, because what happens is immediately if markets kind of start pushing sell side, we could we could be in a situation where just order flow just starts to exist down here on the sell side, and you might get a little bit of drawdown, and you can avoid that if markets close down there. If markets close down there, basically order flow is going to be eaten up. And basically what that means is if we could wick down into that level, but since there's not going to be too much order flow, buy side participants will allow markets to ease back higher. And that's actually what I'm expecting, because on Friday, I keep throwing shit at you guys. On Friday, we had a CPI number that came out, pushed us up here into this range. Okay, we had a trade on that CPI. One of the guys in the room called out a pretty good trade on the CPI, Jesus. And we've kind of slowly pushed back down in, all right? And so right now, we're resting right here at this structure. Okay, right here at the structure on the launch of that CPI, and based off of kind of how the way price behavior works. Again, this is all a theory. At the end of the day, though, usually you see markets kind of pushing back up into that area because of, again, the lack of sellers that got in on the move to the sell side. Their order flow is now kind of tightened up, and maybe they may have to cover. But at the end of the day, if they are out of the marketplace, then that means it'll be a lot easier for us to kind of run back up in. All right. So, but this is more or less on the precipice of good U.S. news. We might have to wait a day or two for this to pan out. We have tomorrow there is a bank holiday, so we might not get what we want. Who knows? Who knows? If we get the volatility to the upside, then that's great. But if not, we might have to wait till Wednesday. Now, for me, in terms of when am I getting in, 1790s is a pretty feasible place. I don't mind. We're right here at these lows. So at the end of the day, this isn't my entry. So this is my entry where this red line is. My entry would probably be somewhere around here. So if I was to redraw, where my stops would be versus where my entry to targets would be. This would be my entry. We would have to redraw this to maybe look something more like that. And that would make a little bit more sense to me. Now, do I like that risk to the downside? I don't like it too much. Trust me, if markets get underneath this level here, I'd definitely be thinking of covering. Okay, just to be honest with you guys, I'd definitely be thinking of covering. So if I have to adjust it a little bit better, maybe we can have something like this. And this is what I originally drew on, but I'm just trying to be modest. I don't want to be too tight. But yeah, that looks a little bit better to me. So if I get a crack above the 1790s here, then I know that we can easily run up into the 1840s. And then I'm just hoping for it, and I'm anticipating a break of the high because we got a lot of wicks up here. So I think price could easily start gapping up into those, pushing up into those levels. And then we can slowly start maybe pushing back up into the 1910s. Now, do I want to take this as a breakout and let it run and then catch, 1,000 pips? Hey, shit, you never know what happens. But that at the end of the day, we do have some things that are counterintuitive to the move. Okay, we have some things that are counterintuitive to the move. Now, one of those things is the dollar index. Dollar index being at this low, I think this is spooking a lot of investors because, again, markets have ran down. Trump has done his thing, and to the extent of allowing markets to run down to this price point. But at the end of the day, I think war would have been the thing that broke this low. Okay, and since that doesn't seem to be happening, we might start getting a strengthening dollar. All right. So again, if we get some dollar strength, then my ideas, my rationale behind that buy side move changes. Okay. I don't want you guys to think I'm just pivoted and stuck to one move. I'm not convicted about these trades. All right. They're trade ideas. They're theories. Upon execution of certain limit orders or buy stops in the market, then at that point I'm just hoping the theory holds true. But trust me, if I get some kind of counterintuitive news event or economic data, then I'll be looking to liquidate the position like anybody else would. All right. So again, if we get any kind of sell side on this thing, I'm not looking to really sell this thing off up until we probably would need to get down into the 1750s. 1750s. If I get any kind of price action down here into 1750s, then man, I think we could easily start breaking the low of this 23.6 and have a full-blown pull back to the 38.2, and that's where my target would be if we get some U.S. strength. But we might not see that until Wednesday. We'll just have to see how markets start to add up. The U.S. news that comes out might be enough to get us there, but if we need some things coming in from the euro, then we're gonna have to wait till Wednesday. So that's it. That's it. If we get some overnight, buy side push, then that may trigger me long. Then boom. Then that means I'm just long. I'll come in and kind of try to start sizing in. I'm not gonna have all the entire size right at the entry. I'll try to size into the move. And if markets pull against me, then at the end of the day, I have a drawdown of maybe 0.5%, so 0.75%. I'm not going to be always sized in. So we'll just have to see how things go. But that's what I'm looking for. That's what I'm looking for. A crack of that high there could lead us further up into price action. And this is all just based off liquidity. Again, if U.S. strength comes in, then maybe we start getting a crack of the 1760 coming into 1750s. Would love to take this thing back down in and start to get a pullback, and I would love to take it to 38 too, which is a much larger move than the move higher. All right. Now again, that's if we just max out at the high. All right, makes sense. So for this Aussie US dollar, which it seems like we're getting some volatility right now, Aussie USD is interesting. So instead of talking about the Aussie USD, since we're going to be talking about the Aussie, I want to talk about the GBP AUD. Okay, so the GBP AUD is the pair that I would like to see kind of run. So if we get some Aussie weakness, then I would love to see this GBP AUD start popping this high. I mean, it's just as simple as that. If we can pop this high, then I can go long and I can take this thing up to the 50. I mean, this is right at a 23.6, so I can take it to the 50. I can start, maybe moving stops at the 38.2. It's just a much more rational position. I could even take this thing to the 61.8. All right, and we know the GBP likes to run. It's a very fluid and a very explosive. The GBP AUD is a very fluid and explosive market, an asset class. So again, if I get any kind of weakness on this Aussie dollar, this is where I'm trading it. All right, this is where I'm trading it. Now, if I get any kind of strength in the Aussie dollar, where would be the best place to trade it? Would it be the GBP AUD? Would it be the AUD USD? Well, I would think that if we get any kind of strength in on this AUD USD, then, personally, as of right now, if you're looking at the market coming in and there being a lot of sell side participation happening right now, there might be some market participants that are tied up in this move at the moment, okay, that may potentially want to liquidate in case Aussie does anything to the buy side. Now, could this low get cracked? Remember, if this low gets cracked, then that means there was some Aussie weakness, and that RBA event that's about to happen in 8 minutes, didn't pan out too well for him. So let's just keep an eye, on this Aussie US dollar. If we get the some strength in on this Aussie US dollar, this would be a good place to start buying it up. And if we get weakness in on the Aussie US dollar, I would like to start buying up this GBP AUD on this end, okay? Because when the news comes out on this Aussie, man, it likes to move. It really does like to move. So other than that, GBP USD, and GBP USD is so interesting in the fact that, you guys know where we are in terms of Brexit. Okay, Article 50, boom, 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 bada, whatever. All right, if we pull over into the weekly, I do want to show you guys the channel that I got drawn up. So let me clear some things off a bit, because things look a little bit ugly, and we'll start drawing everything up again. All right, so let's see where we're at. Okay, just have to memorize some stuff here. So anyway, we're coming in from this low. I had a nice little, I literally did this maybe about, 25 minutes ago. I had this channel drawn up. I was like, okay, that looks pretty good. And then, that was a trend line. And then I was like, okay, we have a pretty decent channel here. So we are trending upwards on the GBP USD. It's, slowly but surely. Now look at the size of the retracements on this thing, all right? So again, got over a 60% retracement there. So when we had the correction, boom, again, you're dealing with the 50% retracement there. From the low from the next low, from here, boom, we're right under a 50% retracement again. All right, so man, this GBP USD seems to be slowing down a bit, and this is a weekly chart, by the way. And one more thing that I had drawn up was a fairly decent structural area. I don't have to draw it all the way over here. It's going to be the same aligning over here, if you guys can notice. Okay, if I pull over, let me just show you guys on the weekly. It's a fib. Okay, it's a fib from the high to the low. All right, so basically this fib right here, folks, looks really nice if you guys can check it out. So boom, 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 came down. Markets came down to 23.6, cracked that low. Markets ranged up into the 23.6, and we've been kind of slowly wedging up into the move right now. So if you just don't even imagine this upper little channel line here, man, you guys can notice we've really been wedging inside of this move. And if we get a crack to the low here, let me draw up it. I want to use one of these little things. All right, so if we get a crack at the low, man, we'll easily kind of start running down and potentially come back down into the previous low that we have right here, which is almost 250 pips away. Okay, so let me zero in a bit for you. Go to the daily. And now what I'm gonna do is I'm gonna go boom, boom. Okay, so this was the level that we were looking at. It's a pretty decent structural level, and we zeroed it in right around here. All right. So as of right now, and I could expand this to fit a little bit better because it does exist outside of just that little range, and we can kind of coin it as this size of a range. I think that's fair to say. So as of right now, again, I would say that we're still holding and we're still positioned to be for this market to exist inside of this little structural range. All right. If you guys can notice, we have some pretty good price action pinging around on the level here. Okay, boom, boom, boom. If you guys can notice here, wicks come down, pop. And on the upside, we have markets kind of fitting fairly well within the high of the range as well. Okay, so to get a true directional move, on the outside of this GBP USD, whether it's to the sell side or to the buy side, obviously we're going to have an extension, right? An extension of that value and price ideal that I was talking about earlier, right? So right now, remember, when there's ever consolidation, value and price is tight, okay? At the moment right now, there aren't market participants really ready to, start putting order flow into the market based off of, them maybe being more convicted about where price should be. So in the interim, as price develops, if we get some kind of news event that puts value up here, maybe at this price point, then guess what price is going to do? Price is going to try to escape and try to get there as soon as possible. Now, why is that going to happen? Because remember, people are trying to catch the profit potential within the spread. Okay, and so that's what I'm looking at. So right now, for me, it looks good for this thing to buy up. I've been looking for the GBP buy for quite some time. You guys could understand that, because notice we've been kind of ranging around in here for 1, 2, 3, 4, 5, 6, right around 6 or 7 days. Okay, so for a solid week, at least 2 weeks, after that NFP number has hit, we've really kind of just milked around and hung inside this low. Now here's the deal. I mentioned on the call, I said, hey guys, if we haven't gotten the buy side on this thing yet, because you guys gotta understand, we got buy side on Euro and on Aussie when that CPI number came out on Friday, but for some reason we just hung around in this range on this GBP USD. So that's why I felt as if, and I want to show you guys something that looks pretty good, I felt as if we could potentially start to get, some sell side activity and on this GBP USD. So what you guys will notice here, if I pull back again, now that I drew up the fib, notice where we're sitting. Okay, we're sitting right here at the 23.6. This is that huge monthly fib. If I show you on this fib, notice we're sitting right here at the 23.6, and the next target looks good to really be that 38.2 or that 50% retracement. Now, if it comes to the 38.2, then obviously all we're doing is coming down into the bottom of the channel there, which is very feasible. But at the end of the day, guys, you got to understand, we're playing in the middle of the channel. Anytime there's a channel, you either want to be playing at the high of the channel or playing at the low of the channel. But when you're playing in the middle of the channel, you're just lessening the probability that, you're going to place an accurate position, okay? You want markets to be at extremes, okay? I always coin it as when it's the second half and there's 10 seconds left and you're 3 points down, the only option you got is a 3-point shot, okay? We don't want, that in-between shit where we could say, hey, we could buy it up or we could sell it up. I don't like that kind of stuff, all right? I'll either want to be extremely wrong or extremely right. Because guess what? If I'm extremely wrong, then I'm going to be able to take profit quickly. If I'm kind of wrong and kind of right, that's going to make me do what? Just kind of sit around in the position and kind of just expect things to potentially add up in my favor. All this bullshit, all these psychological things could come to play, all right? So for me right now, again, if we get some U.S. strength, it would be nice to sell it off back down into the structure. And remember, we're having some FOMC meetings, core retail sales, not CPI, GBP CPI tomorrow on Tuesday at 4 a.m. So this was some of the things that I was thinking, okay, if these numbers don't come out too hot, then this could add up for us to have this thing be liquidated and start pushing down a bit. So if you look at the CPI numbers, out of 5 months we've been green on 4 of them. So March 21st we were green, April, May, June we were all green, but in July we were red. We did not beat estimates. So it just depends, right? So it's really a shot in the dark. At the end of the day, you want to see what the news event does and see how the news comes out. And then if you can catch the move, then go for it. Guessing what's going to happen is usually where people get caught up, all right? And you also want to position yourself in terms of, where markets can go. How's that Aussie look? Okay, Aussie, I personally think Aussie, again, if we get some good news here, I guess we're going to be watching Aussie live because it comes out in the next minute here. So we'll be able to see the actual event happen, right, again, right before our eyes, so to speak. So we'll kind of wait around on that, and maybe I'll end it right here, and then in the next minute or so, I'll show you guys where we're at. How about that? Let's see where we're at. So I do want to update you guys on this RBA news. Okay, so currently right now we do have some jawboning going on, and there's keeping with the precipice that a rising currency is going to hurt with economic strength. Okay, so the jawboning happening right now, could prevail in us having a little bit of a weakness coming in on this Aussie dollar. So we'll see how that adds up. Again, they do want a weaker currency, so they want to talk it down. It's just about how the investor public reacts off of that news. So again, if we have the weaker Aussie, then that means, it's going to be harder for us to crack this level right here, which is the level that we're currently looking at in our room. If we do have a stronger, if we have a weaker Aussie, again, I would, instead of playing this Aussie U, I would come over here and probably try to play this GBP AUD and try to buy it up. Pull out for you guys and try to buy this thing up and kind of try to and hope to see this market start pushing higher. Now the only thing is, man, the Australian dollar's they've been talking a lot about this whole process of weakening the currency. And we haven't really had that effect. So I don't know if it's something dealing with the export business. I don't know if it's something dealing with just the counterparty risk of some of the positions that are that it's trading with. But at the end of the day, if we get that Aussie weakness, then this would be a nice buy side. If we get that Aussie strength, then this AUD USD would be a nice buy side. But I need marks to come up here at 78 80s, to be honest. 78 80s, 78 77 highs before I start looking at any buy side on that. All right. So anyway, guys, I talked to you guys about the US CAD. We're going to wrap this up. It's taking a little bit longer than I expected. Nice push outside of that US CAD. We'll see what we get in terms of everything I mentioned earlier, in terms of the economic data. Will we get a continuation higher? I think so. I think we could push higher on this US CAD as well. I really do. So let's keep an eye out on that also. And that NZD-USD, it's going to be dictated, slightly by what's happening over there in Australia. So again, if we get some good Australia news, then we'll have some counterparty risk happening with the New Zealand, and we might see a continuation higher. So we might actually be able to take a buy-side push on this NZD-USD as well. Okay, so just to give you guys the general synopsis, all right, we got a lot going on here. Euro looks good for a buy side on the precipice of that U.S. news. Even outside of it, I think we'd have a slow liquidation higher. Australian dollar, you guys know what I'm looking at. If we get some good Aussie news, then we could push higher. If we don't, then I want to play the GBP AUD for a buy side push higher. GBP USD is looking pretty nice in terms of this channel that we got going on. We are somewhat playing in the middle of the range, but we do have some pretty interesting things coming out Tuesday, Wednesday. I mean, wherever we're going to be, it's not going to be in this range right here. All right. So if I get a crack at this low down here on this GBP USD, I'll probably start taking this thing short. And if we start to see markets start edging back up into this high, right when I start coming up into the $1.30 flats, I might start looking for some buy side positions there. And obviously that would happen if we had some positive GBP news that came out as well. So yeah, that's really about it. Guys, again, your profit is always my motive. If you guys are a little bit confused, throw me some comments in the section below. We can kind of go over things a bit, but things are fairly simple in terms of what we're wanting to look for here. Still again waiting for the GBP AUD to maybe start rocking to the upside. Wedge pattern forming, kind of spilling over a bit, from the previous high. Maybe we'll retrace back up. That's the move that I like a lot. It used to be that GBP until I realized that we're kind of, we could play both sides. So we'll just have to see. Okay, so cool, guys. Let me know what you think. Your profit, again, my motive. We'll talk soon. I'm out.